Well, Anthony, Murilo, and Armando, it's very nice to catch up with you all again, albeit via Zoom. I trust you're keeping well.
Thank you so much.
Absolutely, Rod. Good seeing everybody.
Yeah, it was good to see you all. So, you know, one of the things we do is we survey tax directors all around the world on a very regular basis about topics that are really top of mind to them. And as we survey tax directors across the South and Central Latin American areas, we're starting to see that US tax reform is really high on the agenda of those tax directors. And Anthony, I wonder if you could just level set us. Why is that?
Well, sure, Rod. Just taking a step back, one of the primary themes underlying the U.S. tax proposals, particularly for U.S. multinationals, relates to an increase in the U.S. tax burden on income from foreign operations. And we see this through the proposed increases to both the headline U.S. corporate income tax rate, as well as the effective U.S. tax rate to be imposed on income from foreign subsidiaries, under our GILTI rules. But even beyond the potential for U.S. rate increases, the U.S. tax reform proposals, contain some pretty significant additional limitations, if you will, on the ability to credit foreign taxes. For example, there's been a lot of talk and attention being given to the proposed overlay of a country-by-country mechanism to the U.S. Foreign tax credit rules, which would really all but eliminate the ability to credit foreign taxes associated with income earned in one jurisdiction from income in another jurisdiction. And this is a pretty significant departure from our U.S. rules today that could certainly increase the risk of unused or stranded foreign tax credits. There's even one proposal out there that would extend a haircut that would limit the foreign taxes available to credit associated with all types of income above and beyond just GILTI income with respect to where the haircut applies today. So really, I think the bottom line, with respect to at least these aspects of proposed U.S. tax reform, if ultimately enacted, right, could operate to really increase the risk of double taxation and maybe result in global effective tax rates well in excess of the U.S. corporate income tax rate. And, as I think about U.S. multinationals and, their operations and their income in LATAM, the corporate income tax rates themselves in the LATAM region, comparatively speaking, are higher, when compared to the U.S. rate or U.S. rate on GILTI income. As we know, a number of the jurisdictions in LATAM impose withholding tax at fairly high rates on outbound payments like dividends, like interest, like royalties, and this potential withholding tax burden, I think, becomes even that much more onerous, given that the U.S. today has a fairly limited treaty network, with the LATAM region. So I think for these regions, as I think about clients, particularly U.S. multinational clients, I think as they evaluate the impact of U.S. and certainly global reform on their ETR and cash tax positions, I really do think they need to spend significant attention and focus on their operations and activities in LATAM.
Interesting. And Armando, how does that translate in the Mexican context?
Yes, it's a very good question, Rodney, because there will be some impacts in Mexico in relation to that. We need to start, for example, with the maquila industry, that we have certain specific regimes for them that we don't know if we can comply with the effective tax rate that will be asked for the United States. Second thing, we need to take into consideration that the states that are the northern border states from Mexico have a reduced rate of 18% in relation to the general rate that is provided in the income tax law, because it's a benefit that has been provided by the government in that. And there are another things that we need to take into consideration, that the tax system in Mexico affects the final result of the income to be paid, such as, for example, adjustment for inflation or foreign exchange losses. In that regard, we need to see what would be the impact on that when you are facing a problem, when you have a company with a high rate of 30%, but had losses from those concepts if in the United States will take into consideration. The other side of the coin will be interesting to see what happened with the Mexican companies that are headquarters located in Mexico that now have operations in the United States. With this new provision of SHIT, what would they have to face problems, because there seems to be that the subsidiary is located in the United States. If Mexico does not adopt the globe system, there will be entitled to tax certain specific transactions among the group. So we need to see what will be the developments of the US tax reform and what will be the answer of the government in that regard.
Really interesting. And how does what's going on at the OECD play into all of this in Mexico, Armando?
Definitely, what we have heard from the tax authorities is that they want to adopt GLOBE. It's very interesting. In GLOBE will be affected for 100 companies in Mexico if we apply the threshold that now is in place, that is at 750 million euros. In that regard, those companies normally have a lot of subsidiaries in the United States. The United States was a very popular site in order to make investment due to the fact of the FDII regime that was in place, that is in place now, and seems to be that will be abolished very soon when the tax reform enter into force. And well, what they have to see is if they start with this restructuring, take into consideration those restrictions that we have seen, and the restrictions that Anthony has mentioned. Probably the government will try to establish the possibility to apply GLOBE, definitely yes. And with that seems to be that in certain part, well, part of this tax collection will go to Mexico instead of to go to the United States.
So fascinating. So quite a lot of factors in play. No wonder this is top of mind in Mexican tax directors' minds as well. And so
that's
Murilo, I'm just curious how it translates. So those comments Anthony was making in particular about all the potential for foreign tax credit limitations for US multinationals and what that means in effective tax rate. How does all this translate into the Brazilian context?
Yeah, Rodney. Brazil, we are approaching a tax reform, a major tax reform in the last 20 years, let's say, that we're going to see a reduction in the corporate income tax rate from 34 to 26%. However, we are going to also have the introduction of withholding income tax, probably 15%, let's see. So this is something very new. And then Brazil, we're going to take an approach in order to analyze the double tax treaty network. As we know, we don't have a treaty with the US, with the UK. However, we have a treaty with Mexico. We have a treaty with European countries. So we'll be looking into treaties to try to get a reduction on the potential withholding income tax that we might be seeing applicable for next year. But the drop in the corporate income tax rate, let's see if this is real pass. But I understand this is also significantly high taxation, maybe for multinational companies in Brazil.
And so it's a really interesting point, Murilo, the point you made about how the meeting of US tax reform and maybe Brazilian tax reform might cause folk to reevaluate how their businesses are structured across Latin America. I mean, Anthony, what should folk be thinking about doing now in response to all of this change?
Yeah, well, listen, I think it's really important for every company to really review the risks and honestly, maybe some potential opportunities, right, around the various US and global tax proposals. I mean, we've really entered what I would view as a pretty important stage in the process now. You know, here in the US, right, we're starting to see more details, including draft legislative text around the various US proposals. And there's a real possibility we could see reform enacted by the end of the calendar year, you know, on a partisan basis through the budget reconciliation process. And the OECD, continues to move forward. And we'll be meeting in October, and we should see more details around Pillar 1 and Pillar 2 thereafter. As part of the review that every company, I think, really needs to undertake, I think it starts with modeling. Modeling out, the impacts of reform, both from a domestic perspective, cross-border impacts, the impacts the reforms could have on the company's cash tax positions, effective tax rates globally. And obviously, there will be potential financial accounting implications to account for the changes in tax laws too. So the modeling helps think about potentially remeasuring things like deferred tax assets and liabilities. The modeling has also, I think, been a springboard for companies to think through some other things as well. Some companies, and we've supported a lot of companies in this regard, have wanted more of a voice around aspects of reform and meeting with various government officials here in the US or outside the United States. The impact analyses that companies are doing, I think, has also caused many companies to start thinking about and contemplating transition planning in connection with tax reform, whether it be relating to the timing of certain transactions before or after the effective dates of the new rules. And, I think lastly, and maybe getting back and finishing with the point that Murilo made, I think many companies are starting to think a little bit more broadly and longer term about how the potential changes could really impact their, legal entity, and operating models. And I think LATAM, like I said, for all the reasons we've discussed, is a real region where companies really need to focus from that vantage point as well, given the potential reform that's on the horizon.
Well, that's really interesting. So actually kind of a convergence of views, all sort of supported by the survey data we're getting from tax directors, which is this is a live issue. There's a bunch of reasons why. We've got the convergence of some significant US tax law changes, which given the rates in LATAM, significant. We've got proposed responses in Mexico in consideration of adoption of Globe, but also the history with some Mexican entities having deliberately gone into the US, and then significant tax reform, the greatest in potentially the last 20 years, Murilo, which will really be a sea change in how people look at tax affairs in Brazil, and may well lead to further optimization of supply chain and legal entity holding. So just a lot going on, in other words. Must be keeping you all very busy.
Definitely,
it's fun
yes.
to be an international tax professional these days.
It sure is. May we live in exciting times. I think we might regret that one.
That we do.
Okay. Well, Armando, Anthony, Murilo, thank you for your insights, and stay COVID safe.
Yeah. Thanks, Rod.
Thank you.
Thanks,
very
Murilo.
Thank you, everyone.